What difference has this new strain of the virus made to your more positive view on equities in the first half of next year?
I think it produces a degree of caution, I think, at least for the first 2 months of the year. I think the base story sort of remains, which is dominated by vaccine rollout. And what we've heard from the scientists so far is that the vaccines are still likely to be effective. But what the markets will want to know, I think, in the next 1 to 2 months is this really a variation that merely causes more transmission rather than causing a higher percentage of hospitalization and maybe impacting vaccine effectiveness? So those are the questions that need to be answered, and they're not going to be necessarily answered in days. It's going to take weeks. We have already had warnings from the European authorities that we're likely to see some spread of this variation into to Europe, and that will be watched closely as well.
So as we analyse investor behaviour as we come into year end and the early part of next year, do you think the preference is going to be for locking in gains then and making a print on any profits you've made rather than considering putting new money to work in the market?
I think the market has, discounted a lot of good news, especially in the US market for next year. That good news will arrive, but people might get a little bit nervous that the news isn't necessarily going to be coming through quickly in the first part of the year. It's also worth pointing to the Georgia state elections. That's a mixed blessing for the US equity market. If there's a chance that the Democrats win both seats, then we're certainly likely to see some profit taking in the technology sector. And that might well be the case, given that the race in both seats is actually going to be pretty close. So as we approach that January 5th vote, we could see a bit of a pause in the market, a little bit of a further consolidation or pullback in equity markets as well.